like an addict, do I gotta have it. I ain't even playing, got a really bad habit. If it moves, gotta grab it, fuse like a magnet. Lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back, better than last. Yeah, it's a new me, never gonna look back. Never gonna look back. Cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change. Slowly take a step today. I will never be the same, cause that's what it takes.
All right, guys. Happy Thursday, May 30th, 2024. Welcome back. We got something a little bit different tonight. I'm going to wait a few minutes for folks to come in, and let me say hi to Mediocre and some of y'all in the chat. Mediocre, how you doing tonight?
Pretty good, buddy. How about you?
Been fighting a headache all day, and I'm a little bit frustrated right now because I've been working on a video this afternoon after the market closed, and I'm just a few minutes short of getting it done. So I guess the episode 35 of Fudbusters, you guys are going to have to wait till the morning for that. So we'll get that out in the morning. Let's get this live stream going. And I hope I'm not getting sick because I'm on about my 4th dose of Tylenol today. Let's see if a little tequila helps, Mediocre. You got a drink tonight?
I'm going to grab a beer in a few minutes. I haven't grabbed one yet. But...
Yeah, grab you one when you get a chance. Maybe when we... Actually, why don't you do that while we're waiting for some folks to come in, and I'll kind of prep the audience on what we're going to talk about today.
Perfect. I'll do that.
So, guys, the plan is, as you guys know, there is a lot of volatility and a lot of excitement going on in GameStop right now, and hopefully some of you guys made some money a week or two ago when that thing ran up. And hey, for all we know, it might run up again this week, next week, in June. We don't really know, or maybe it's going to go back down towards a more fundamental value for those that look at the fundamentals and the ratios. Hard to say, but I think it's easy to guess that there's going to be some volatility. But as I'm looking around on social media, be it Reddit, Twitter, YouTube, and not just even, related just to GameStop, just in a lot of these plays, I feel like, somewhere along the way, the due diligence that we look at in these meme stock plays changed. It changed over time. And I'm not sure where that change happened or why. Well, I have my theories. But I thought it might be interesting to go back to Roaring Kitty, some of his original DD before GameStop started running. So we're going to look at just a couple of minutes from July of 2020. And then I want to look at maybe a little bit longer video from January 2021 when it had started running, and see how he's handling that 1,000% run up, because it ran before the big run. The video I have picked out for you, it had run from $4 to $60. So over 1,000%. And he did a live stream January 21st, I think, a couple days before it went into a multi-$100 run. And I kind of want to see. I haven't listened to all of this. I kind of want to see, what was he thinking? Was he talking about billions of synthetics? Was he talking about 83 billion in swaps? Was he talking about the short volume? Was he talking about FTDs? What was he talking about? How was he approaching his analysis on a play? And I think, for some of y'all who never listened to any of that before things really got crazy in middle of June 2021, and all of the, well, I'll leave out the C word, but all of the theories that have transpired since the middle of 2021 to now, was that Roaring Kitty's original DD? And if it wasn't, how did that come about? Let's kind of, I thought maybe we have a drink, have a smoke, and listen in and chat. We can stop it at any point and comment about what he's saying and how he's looking at it. And I want to hear from you guys. Some of y'all might have already seen this. Maybe you haven't. And maybe we'll all learn something together. Who we got in the chat here? We got Anya. What's up? Lux Dove, Juicy, Kelly Boy, Cupid News. How you doing? Jack Wolf. What's up, brother? Spencer G. What's up, G? Broke Ape and your wife's boyfriend. What is going on? I have a couple of other guests that I have invited to, just because I think, the more the merrier, just to get people's different perspective on where we're at and where we've been. And so feel free to interject your thoughts in the comments as we're listening to this stuff. And as soon as Mediocre comes back here, I'll start playing this first video. I know he's trying to get some food in. I haven't eaten yet. Haven't eaten all day since breakfast. I got busy watching stocks, and then right when the market closed, I started working on my video for y'all, which I did not finish. So that'll be out in the morning. So hopefully we don't get too crazy here, because I'm drinking straight tequila on an empty stomach at this point. And I just had my first sip, but hopefully, I'm feeling a little bit ill, like I'm getting a cold. Maybe this will kill it. We'll see. K-Rock says, did you get my Twitter message? At the time of me going live, I did not have any unread DMs, if that's what you sent me. However, there are some filters for messaging that Twitter screen stuffed out. So I will check that when we get done here and see if it's in there. I typically check my messages and try to reply back to y'all as quickly as they come in. Juicy, yeah, I don't know. I don't know if I'm getting sick, Juicy, but like I said, I'm about my fourth dose of Tylenol with a headache that won't quit. Anya says, awesome call on CVS. Yeah, I got Anya, you have been on us about getting a video out on on. I think that's the ticker, right? ONON. That one's been on fire. So I'm going to give you props for that. And I want to get a video out on that one. We need to do some updates on CVS. We got some updates on Disney. What's his name? Peltz sold all his Disney. I saw that. We got a couple pending bankruptcy plays. We got FFIE. I think Mullen's going to file Chapter 11. We got Barnes & Noble. People wanting me to make videos about Barnes & Noble, BNED. They're about, guys, BNED is about to dilute from 53 million shares to 1.6 billion. 53 million to 1.6 billion in the coming weeks. And the shorts are all over that thing, as you can imagine, when you got a dilution coming that is that massive, that once it goes through, all the shorts will be wiped out. All those shorts will be wiped out. But in the meantime, people are trying to get the upper hand against the shorts. But it's kind of like tightrope walking, right? So everyone, I don't know if I'm going to make a video about BNED. It's a fine volatility play, but just know the fire that you're playing with, because at some point, there's going to be some massive dilution. And FFIE, That one's been a bit of a battle. It was up 27% today after their earnings. But what a train wreck of a EV company that one's been also. It went from 3 pennies to 3.89 to 56 cents, all in a matter of days. And it's going to be headed back to 3 pennies at some point soon. Your wife's boyfriend says, grab a snack. Oh, man. I don't even know what we have. I have some tilapia in there, and I got some veggies from the garden that I'm going to cook up tonight. So, we're not going to go till midnight tonight. We're going to go till we reach a good stopping point, I think. And as soon as I see Mediocre back, then we'll start up the Roaring Kitty video. Let me go ahead and put it on the screen here. There he is.
Thank you.
Were you able to get some food in?
I did. Some more shots.
All right. So Michael says, which earnings have you liked today? And HRL reports before the open and made 38 cents versus 40. Who is that? Hormel? I don't remember that ticker off the top of my head. Yeah, it is Hormel. That is not a company that I follow. Not a company I follow. I saw that Salesforce reported some issues today. Who else? And I also got an alert about McDonald's that maybe it had reached a price target that I was interested in. Let me just check my. Yeah. So I had 252 as a point of interest for me to start paying attention to McDonald's. Let's just put up that chart here real quick, and then we'll get into the Roaring Kitty stuff. Stop screen sharing.
Yeah, I haven't watched that Roaring Kitty stuff in a long time.
So I drew this line sometime back just to give myself an alert to start paying attention. And McDonald's is, dealing with having to raise prices and pushing people away and inflationary costs and just customers, not shopping there, not buying food there because of the prices. But it's starting to get to a point where I need to do a video for you guys and do more of some thought. Like, am I ready to start grabbing in on a sweet dip for the next rip? And it's a blue chip company. The rips, I'm not expecting it to run up 30% in a week, right? Mediocre, these blue chips. But these companies that are profitable with a long history of revenue growth and a long history of profits and paying dividends, there are moments where you can start accumulating them on dips where they're having some problems, and then just go to sleep for 5 years and you're probably going to be okay.
Absolutely.
So
There's
McDonald's,
some things we've been talking about lately.
yeah, I'm always looking for these, and they don't come along too often. So you don't see a lot of videos from me about these, but I have a bunch that I'm watching, and every time one hits a target, I throw out a video for you. So we're getting in the zone for McDonald's. These are the type of companies I want 80% of my portfolio to be: profitable, dividend paying companies. Yeah, it's boring compared to squeeze plays and meme stocks. That's why I do those on a day-to-day, but not with my entire portfolio. A small percentage of my portfolio. So if I lose, I'm not crying. And if I win, then it just bumps up my portfolio return. So What else we got? Carlos, how you doing? Jersey Recycler, have I looked at or traded Lucy? I saw it being mentioned on social media. I have not traded it. I saw it was in the news today or yesterday, and I don't know the details why. It's not a stock that I regularly trade, but I remember it being of interest. Oh, that's that eyewear company, right? Yeah, I think the time that I remember talking about it was when they IPO'd. Was that one of those? Is that a Chinese company? Key executives? No, it doesn't look Chinese. But I remember that IPO, and then they tanked. All right, stop screen sharing. Let's go back to Roaring Kitty. Audio. Jersey Recycler says, I'm just range trading GameStop. Yeah, I don't know that I want to talk tonight about trading GameStop. I'll do a TA and maybe just where we're at video over the weekend. But I can tell you the people that have been making money in our Discord group this week were the ones that sold puts on GameStop. And they, everybody picked different strike prices that they were comfortable with. I think the average was between $18 and $20. And that's been a great trade. Collect the premium on Monday and then just sit there and let it trade sideways, because we all thought, pretty much it was likely to trade mostly sideways this week. And maybe, once we knew the earnings date, that there could be a little bit of run up into earnings, that pre-earnings excitement, and then earnings is not really going to be that good just on the numbers. I know the YouTubers that cover GameStop tell you otherwise. It's pretty unimpressive. Let's be blunt. If you're not being emotionally tied to the play, the numbers are bad. But the unknown is, could they have some news? And I saw today that GameStop announced that their earnings is going to be released on June 11th after hours. So we will see. And I hope they have some good news that sends the price up for everybody again.
I mean,
go ahead. Go ahead, Mediocre.
I said I tried to GameStop this week. It's going to happen.
Yeah, I was just saying the people that made money in our group were the ones selling puts on GameStop this week.
Yeah.
And that's not a negative bet, just in case, if you're tuning in, what are they talking about selling puts? It is a wager that, if you sell an $18 put, you're going to collect, let's just say $100, $200 per contract, depending on where the stock was at the moment you sold it. And as long as it stays above that strike price by the end of the week, you just get to keep that money. That's free money. Imagine if you did that, 2, 3, 5, 10 times. Mediocre, there were people making thousands of dollars this week selling puts.
Tony, I think I went through your
you think what?
I'm echoing.
Might be because I have the screen share on.
Is that better? Yeah, that's better.
I turned the screen share off too. I don't know if that has anything to do with it. We'll test it out in just a second. But the other, just to finish what I was saying about the cash secured puts, as long as it stays above that strike price, you just get to keep the premium. If the stock were to have dropped this week below your strike, then you are basically agreeing to buy the shares at your strike. So if you sold an $18 GameStop put and it dropped to 17 by the end of the day on Friday, even though it's 17, you're going to be on the hook to buy 100 shares at $18. So that's the risk. That's the risk. If it were to have a precipitous drop, then then you're on the hook to maybe pay more. Depending, that's why you got to choose your strike price with, a level that you're comfortable at. But like I said, we mostly thought that GameStop was just going to, basically trade sideways this week, and it has.
Yeah, I tried to buy them, Tony. I tried.
Tried to buy shares.
Well, I sold puts to get in, but I don't think it's going to happen.
But you're going to keep the money, right?
Oh, absolutely.
Yeah, and you did quite well, from what I understand.
Oh, absolutely.
Were you making pennies, or were you making dimes? Mediocre.
I was making dollar bills, Tony.
Dollar bills. Yeah, that's what I'm talking about. Yeah,
That's
some
right.
good premium on those options on GameStop. Jersey Recycler says, saw some bearish articles on AMC today. Yeah, let's just get one news item on AMC out of the way. There was a selective default notification to the credit report from S&P and Moody's, or one. If it wasn't from both, it will be from both. They're both going to annotate this. And we already expected this, as we discussed in our live stream talking about the debt restructuring a week or so ago. And Markets with May reminded us that they generally update the credit reports at the end of the month. So she was right, as usual. We got the update today with the SD notation on the credit file. And that means selective default. And it's really a the bears are going to say AMC defaulted on its debt. When you do a debt for equity swap, just whatever the company is, the credit agency is going to give you a SD notation for it's either 2 or 3 weeks, and then it goes away as long as no more adverse events happen. And really what you should do, instead of reading some bearish tweet or post, is pull up Moody's, pull up S&P, and go read the entire update on the credit report. Because generally what they will say, if you read the couple pages that they print, is this was actually a good thing, and we're going to take this notation off in a couple weeks, and this actually puts the company in a better position. But hey, it's our rules. They did a debt for equity swap, and the rules is the rules. So don't worry. I'm not worried about that. And it's about the fifth time since 2020 that AMC has had a SD notation. It's a non-event, other than it gives the haters, the popcorn project people, and the trolls something to bitch about, something to scare you about. All right. You want to hear some Roaring Kitty, Mediocre?
Yeah, I'm interested to see. To see what we're going to talk about here.
What I have here is one of his very first DD videos from July of 2020, and GameStop was trading for a couple bucks a share. The market cap was under $260 million. Under $260 million. And right now we're at what? Market cap of $7 billion.
Yeah, I don't know what the float is now.
$7 billion. So he identified that the market cap was under the book value of the shares. And some of y'all have heard me talk about book value. And if you haven't, well, I'll be talking about it probably in my next upcoming video, just because I feel like there's a lot of people that are very excited about GameStop and a short squeeze, and that's fine. It's fine. There could be a price run up as long as there is excitement. But as we're trading it, and as we're thinking about what is the probability of different events happening, different directions in the price, I think, for viewers of my channel, I'd like you to understand how Wall Street is viewing the financials and the fundamentals, because the GME YouTubers don't give you anywhere close to an accurate representation of how real financial or fundamental analysis is done. They'll cherry pick, oh, well, look at the balance sheet. It's got a high current ratio. And then they won't talk about all of the other problems. They won't talk about any of the problems. So I just want you guys to be educated. And then you can trade, on all of it. Then you can trade it however you like. Like, I don't hate GameStop, but I look at it from a very, one step back emotionally from all the people that is their life. And that is what has enabled me to trade GameStop profitably for the last 18 months. In, out, in, out. No fucking buy and hold. Buy on a dip, sell on a rip. And knowing what I know about the financials and the fundamentals, knowing that that is the smart play. Get in when it's cheap, sell into run-ups, because as long as their revenues are falling and they weren't profitable, that price was going to keep coming down. Now it's getting a little more interesting with the cash raise, but it only shifted the balance slightly. It only shifted the balance slightly. It increased book value about $2, and cash on the balance sheet is meaningless in the fundamental analysis, really, for any of us that do real fundamental financial analysis. Out of 10 boxes, it only ticked one. It increased book value, but it adds potential. It adds potential energy, because now management's got another tool where they can go out and acquire somebody to bring profits in.
Like Toys R Us?
Radio Shack. Yeah. I don't Bed Bath and Beyond, Toys R Us, Radio Shack, fuck all that. That's anybody who's pushing that nonsense. You're just going to dig GameStop's grave faster. GameStop needs to be looking for profitable acquisitions, because what they're really lacking is profits.
Revenue.
They have fallen revenue, but they're cutting costs, and they were able to eke out a little bit of profit in Q4, but their expected profit, if they do nothing this year, is 1 or 2 pennies, and $2 billion of cash on the balance sheet ain't going to do much for you to improve profits. You can invest some of it in treasuries, or other people have crazy ideas that he's going to invest it in Bitcoin or whatever. I don't know. That all has risk.
Why not invest it in a company that you have something tangible?
Right. That's what that's the smart play. If I was the CFO, I'd be looking for how do I get some real synergy and return on capital
so
with that cash.
Doing what I've been doing for however long the company's been in business, right?
You don't want to invest in a brick and mortar store whose core operation is buying treasuries, right? How exciting is that? Basically, you're just saying our business is a failure, but we're making 5%. Do you think that Wall Street is going to pile into that stock with tons of institutional ownership? Is that really exciting? No, they got to do something, but the potential is on their side. So I'm not knocking them. I'm just saying I want to see some intelligent use of that cash. And it did change the game. And who knows if there's another price run up, they could do another offering and add another billion and even more potential. And then it just gets more exciting, even though it is more dilution. It is more dilution every time they do that. It changes the potential game. And there is, in my mind, there's no bankruptcy risk. Anybody who's saying that with GameStop, go jump in a lake. But the biggest issue they need to address is lack of profits. What's up, lazy one? All right, let's start up this. Where'd mediocre go? He left again. Let's start this up, and you guys let me know if you're hearing an echo. Sometimes it has to do with the audio when I'm doing a screen share. let's see. Oh, before I start this video, he already went over the digital risks, and he already went over the negative sentiment. I think we all get that, right? We know that there is a risk, and there always has been, that gaming is going to transition to digital. So I don't think we need to re-listen to that. And we all know about the negative sentiment for GameStop, and that hasn't really changed. The people with negative sentiment, it's the same arguments now as it was in 2020. But I want to hear what he thought about it from the value side. So with that in mind, let's kick this off, and then we'll move into his more celebration video in January of 2021.
And finally, value is being overlooked, I think. I would like to keep this all on the same page. I need a drink. I'm just going nonstop, you know? All right, so because of these first two things, I feel like no one's looking under the hood. I already said that, but there's a lot of things that are happening fundamentally that that one could be excited about, myself included. So, there's a new board of directors, there's a new management team, and so that's what I mean. People criticize GameStop's historical decisions, their poor acquisitions and so forth, and maybe poor operational decisions, whatever it is. But it's like, all right, cool, yeah, that's fair. But we have a new management team.
Mediocre, did you know prior to this that GameStop had invested in several other companies that weren't performing?
I did not.
I forget what they were. There were two of them at least. I think one had something to do with mobile phones, and I forget what the other one was. Not really important, but that's why they ended up having to write off all their goodwill, because they ended up selling those companies. They weren't working. They weren't generating any profit. So when he's talking about, what he just said about getting rid of those other businesses, that's what he's talking about.
Gotcha.
Right now, not to say they're going to hit it out of the park. That's not the point. The point is just that it has changed. And so far, I have to say they seem somewhat competent. And they just got Reggie to the board too. I feel like that's big. But then you got Sherman for the management team. He's only been here just over a year. He's just getting started. He needs a little bit of time. I know Barry, he voiced his opinion on the new board seats, and he wasn't in favor of Hester Permit. I kind of get that. I don't.
I think all the people that he's waxing eloquent about right now are all gone. It was the new board and the new management. I think once Ryan came in, pretty much everyone that he's talking about that he loves is now gone.
It's a marginal impact on the bull thesis. It's okay that Hester Permit, that they seem like they know they get their finger on the pulse. I don't think it makes that big of a difference, but I kind of get where Barry's coming from, because it kind of feels like management's been doing some good things over the past 12 months in the right direction. And we'll get to some of this stuff as I work through this bullet point list. But I just mean, so far, from my from it just looks like they're competent, they're doing the right things. And as a value investor, you need to see that, because if they don't, you kind of need stuff to go. You need a lot of stuff to go right. I don't want to say that, but it's just an important element of this type of a thesis. And one of the ways they've been showing that they know what they're doing, or they're seeming competent, is they've been cutting costs. So they talk about cutting costs. It's one thing to talk about, and one thing to actually do it. They seem like they're doing it. So they're cutting costs. In fact, part of what I want to do here during this video is I want to review some of the fundamentals. And we'll get to this, but I just want to review a couple more things as I do this. Sorry about that. They've got reducing cost of goods sold, so it seems, identifying the stores, testing it, improving working capital management. A lot of people talk about this, but they seem like they're actually doing it. They can make better capital allocation decisions. You can see them selling assets, actively testing stores. They're not making any dumb acquisitions. This is just stuff that it demonstrates to me that they could be on the right path, that they could be. When you're selling assets, like in this year, when it's a tough year for GameStop, and they're selling the jet, doing some sale leaseback things just to generate a little bit extra cash. That cash goes a long way right now, and And of course, testing the store, that feeds into longer term things, right? But this stuff's important. And then improved flexibility they have right now because of the refinancing. They extended the maturities and they got rid of some covenants. Like I'm
So all that he's talking about, the maturities and the covenants, they paid off that debt after they did that capital raise in 2021. So at the point of him filming this, they still had a few $100 million in debt.
less than a whole bunch of things here, but like how not enough people are talking about this stuff. This is what I mean. Like the stock price, it seems it's gone nowhere for 12 months, but the fundamental events that have been unfolding are like objectively positive. They've been incrementally improving, and that the price is still flat is surprising to me. They have adequate liquidity now to get through the console refresh and for a potential turnaround. It might be still too early to that. When I say potential turnaround, I mean like revamping their business model to be like they could be here in 20 years. Right now, I'm not sure about 20 years, right? Not many people are. But they might have enough liquidity, especially if they get to the console refresh and can generate some extra cash. They might be in a good position, tough call. But definitely enough liquidity that people talk about GameStop going bankrupt and stuff. If you're saying GameStop is going bankrupt, you need to show your work on that one, because I don't see it at all. Highly unlikely to happen. It's hard for me to take those types of theses, that type of a thesis seriously. So I'd be wary of that. Anyway, GameStop still remains highly relevant too. They got $6 billion in revenues at the tail end of a console cycle. They had $1 billion during the latest quarter, Q1. Look at this. This was they had to we're dealing with the pandemic, end of a console cycle. They literally had to close their doors, and they still generated $1 billion in sales. Like $1 billion. And then I talk to my family and friends, and they go, "Yeah, no one shops there anymore." I'm like, "How you do $1 billion? How you do $1 billion?" And anyway, I know free cash flow is what matters, but still, that's telegraphing to me like people still shopping here. And yes, everyone will focus on the year-over-year declines, right? Yeah, let me drink a beer here. But it's just that sheer level that sticks out to me first. So let me get back to this. So I like to see it. $6 billion in revenues is legit. That's a good size. That's a good size. Sometimes you come across a company, it might only be like $1 billion in revenues, $2 billion in revenues, $2 billion in revenues, especially like a retail company. And I think, all right, well, is it going to fall off a cliff tomorrow? And you might say GameStop's revenues are currently falling off a cliff, but if you're still at $1 billion right now with a new console cycle on the way, that's legitimate. And $6 billion is a good size. Okay, so then they have significant operating leverage because of this. It's trading at just 4% of these revenues. You don't see too many companies trade at 4% of revenues with this type of a financial situation. Like usually you see that, and often when you see that, companies might be going bankrupt in the near-term future. And like I said, I think that's highly unlikely with GameStop. So 4% of revenues with a new console cycle, I think, what the hell? What? And so anyway, if the things just go a little bit right, then that operating leverage can lead to a huge rise in the share price due to a realization of what fair value is. All right, so then just the company's been historically successful at generating free cash flow. This was the next item that I had on that list. If we just pull up simple free cash flow here, in fact, let me scroll over to just this side over here. Ignore the conditional formatting. I didn't clean it up. But if we look at simple free cash flow, this column, this row here, that's operating cash flow less CapEx. Look at they were generating $500 million there for a couple of years, and it's just been historically positive. This is rolling 12 months, so this is through Q1 2020. If you look at fiscal year 19 got a little bit wonky because they were aggressively paying down some accounts payables, and they're trying to work on working capital. They're definitely close to burning cash right now. We don't need to get into the specifics, but anyway. But if you go to the rolling 12 months and you start seeing they've been generating positive free cash flow this whole time, really impressive. You don't see that too often, and it doesn't mean it's what's going to happen in the future. It just sticks out to me. And then generating $500 million in that type of, I call it simple free cash flow. That stands out to me.
So it is interesting to me that, he's talking about free cash flow. And like, for example, I mean, when he was looking at free cash flow, in years previous to 2019, it was positive free cash flow, but for the year that just ended, 2023, back to negative free cash flow. And that, I think this is one of those things that the GameStop YouTubers don't like to really talk about. They want you to focus on the balance sheet, and they don't want to talk about the problem of not having operational profits. GameStop's free cash flow for 2023 was negative $225 million.
Tony, you know what this sounds like?
What?
Similar.
What?
Sounds like another company.
Like what? Are you trying to say AMC?
Talk about the fundamentals and how it's valued and stuff like that based on
Well, I mean, he's going to get to the next bullet point here in a second, where he talks about how it really is undervalued, despite some of the problems that it has. Wait till he gets to the part here about book value versus market cap. That's where it's going to smack you in the face. Like, wow, this is the opportunity that he saw. And I'm so in love with his analysis from 2020, but it is so far different, exponentially different than where we're at right now. Your jaw's going to hit the floor. Let's let him keep going.
Yeah, you can't help it.
So yeah, despite
The video.
Can't help what?
Go ahead, Tony.
What'd you say? You can't help what?
When you're sharing the video, I echo.
Okay. Well, you can just mute your mic, maybe.
If I mute my mic, hear me.
Yeah, but when I stop the video, or raise your hand, and I'll stop it, and we can chat. Or is it echoing right now, even though the video is not playing?
Yeah, it's echoing now.
Okay.
That's what they're saying.
Paradox says, whose side are you on? I'm on the side of making money, brother. I'm on the side of not buying and holding something and watching your portfolio evaporate. Now, if you're in GameStop, at $4, $5, $8, $10, then you're fine right here at $20. But keep in mind, there's a lot of people that have price averages on GameStop of $100, $200, and they've been told by the YouTubers in GameStop land to hold it all the way down to 10, and then it ran to 80, and they were told again, don't you dare sell, dime in hand. And I mean, if I missed the opportunity to buy it at $10, I would have definitely been selling, just like I sold my AMC in that run up at the exact same time. If I would have had GameStop for the last 18 months, every time I buy it on a dip, I sell it on a rip. And I absolutely would have done it 2 weeks ago when it happened again. All I want to do is see you guys make money. And stop listening to people that are, I mean, you can do what you want. You can do what you want, but if you're negative on the play, might be time to consider something different. At least consider taking some of your shares that you have a low cost basis on and taking some profits on the next run up.
I think that, I know Hester and Perman comment on this too, but I think they've had bloated costs in the past. I think SG&A, selling general and administrative expenses, seem to me pretty high, and they probably could have been doing a better job of managing that working capital. I think that previous management team was just a little bit lazy on that front. They were kind of just riding the wave of the business model, and they weren't really trying to do a diligent job of managing the operations. And so they were still generating a ton of free cash flow. It's pretty impressive. So yeah, it seems to be overlooked a little bit. Okay, so then right now, 260 million market cap, give or take. And I think this is trading at what I perceive to be a discount to the fair net asset value, to fair book value of around 400 million, give or take, plus a conservative estimate of future free cash flow. So this is what I spent a little bit of time on in this video. I don't know where I'm at right now and time-wise, but let's just dig into this just a little bit. Just take a peek at the balance sheet. And when you look at the balance sheet, like, doesn't it stick out to you that cash position of 570 million to a market cap of 260 million? Like, holy shit, right? I mean, you don't see that often. Usually when you see that, it paints a really dire picture for the company, and maybe that's why this price is in the gutter, but it doesn't deserve to be in my.
All right. So right there, he's talking about cash position of 570 million to a market cap at that time when he was filming this of 260 million. You could see how that would be considered, just looking at cash to market cap, how that would be undervalued. The market cap, the float times the share price at the time he started looking at this, the market cap was lower than the cash. Now GameStop has $2 billion in cash, but the market cap's $7 billion. So when I think of undervalued, it's not, using his analysis, it's not undervalued right now. We have market cap at more than 3x the cash. Just my first thought on where he's at.
My opinion, and I think people might be thrown off by some of these things. And the accounts receivables, that's the thing. So if the company's not going bankrupt, we can assess these things with GameStop being a going concern. And if that's the case, you don't need to discount them too heavily. So when I'm pulling up this balance sheet just to assess the quality of book value. So right now we have book value of about 435 million. And the question is that is that a fair estimate of what book value is if the company were to like sell all these assets and distribute it to shareholders? It's not a true liquidation.
So book value, you can see this number down here that he has highlighted at the bottom, 435 million. That is your total assets minus the total liabilities. So 2.4 billion minus 2.0 billion gave them a book value of 435 million. Again, the market cap was 260 million. So the market cap of the company, outstanding float times the share price, was almost half of the book value. And let me look on GameStop's most recent quarter. Their book value is 1.3 billion. 1.3 billion is the book value, and the market cap is 7 billion. So we're at 6 times the book value. So again, when I say that this stock price is not undervalued, and people argue with me, clearly it's undervalued, Tony. Not according to cash to market cap, not according to book value to market cap, not anywhere close to undervalued in the pure sense that someone like myself or Roaring Kitty would analyze a true value play, or Wall Street for that matter. When we're looking at balance sheets and cash flow, these are the things that you should be looking for to determine what is undervalued. Your emotions of what it should be worth doesn't determine if it's overvalued or undervalued. Emotions, belief, religion, that has nothing to do with it. This is all black and white, red and green financial ratios that anyone who's taken an accounting or finance class could tell you if a price is undervalued or not. And that's not knocking GameStop where it's at, and that's not saying that it can't go higher than where it's at, because anything can happen in a short squeeze. I want you to know, like, my frame of reference is very similar to his on any stock when I am looking for something that is a value play.
I don't want to do a liquidation analysis because I don't think the company's going bankrupt. I just want a quick assessment of what their assets are currently worth. So that's what I'm going through. Like cash, that's pretty legitimate value there. 570 million. Receivables also pretty decent. You can kind of bet on that to a degree. Maybe 50 million, 60 million. Merchandise inventories. You see the big decline in inventories. They've been been working on improving their working capital management, and I like to think I don't like to think it would be nice if the inventory that they're selling off has been the lower margin or
Mediocre. I want to give you a second to without the echo to before we get too much further and move on to the next video. Do you have any comments about, you're a business owner, you're familiar
You
with
broke
balance
up.
sheets, you're familiar with cash flow statements and balance sheets. Do you have any thoughts about what he's talked about here so far?
I mean, listen, for me, what I do, I care more about working capital and making sure that everything lines up. That's how I run my business, based off of cash flow.
Well, you're
cash coming
not,
in, cash going out. You have to have that.
because you're not a
And
publicly traded company that needs to justify a share price.
exactly.
So I understand why working capital would matter to you. For you guys, working capital would be current assets minus current liabilities. So we got total assets minus total liabilities. That's your book value. Your working capital is current assets, things that are due in the next 12 months. Current assets minus current liabilities. You got current and total. Current plus long-term is total.
And I also pay a great CPA.
Yeah, that's
Don't mess around.
I'm not an accountant. I hire accountants, but I know just enough to be dangerous. Mediocre.
That's right.
All right, let's get back to let him finish up his pitch on why back then GameStop was truly undervalued.
Inventory in less demand and so forth, so it's only higher quality inventory that's left over. And actually, if you look at the 10K, this is Q1, but if you look at the 10K and you start going through the footnotes and analyzing the inventory, it kind of looks like that a good chunk of the inventory, the majority of their inventory, is higher quality inventory. And by that I mean newer hardware, newer software. And if that's the case, this inventory dollar amount might be pretty accurate. And some people look at GameStop inventory and they think, oh, that's used games. That's probably not worth what it's on the books as. But this stuff's carried at costs. Even those used games, the older used games that they have, if many of you may know, they're paying a small fraction of what they ultimately sell it for. I know people complain about that, but it's carried in the books at that cost, at what they paid for it. So even if it might not be selling at the sale price they hope, in theory, you'd think that they could potentially get in the ballpark of cost. Maybe not, but that's what I mean. And if the inventory is indeed higher quality, newer and so forth, then that inventory figure is probably in the ballpark of reality. And prepaid expenses is a going concern. That's probably a fair value of that, maybe a slight discount. Assets held for sale, I think that's the Jet, but they sold it like the week later, so that's done. And I mentioned the warehouses and the distribution facilities that they're hoping to do a sale leaseback on. It's not under assets held for sale. It's elsewhere, probably under property and equipment. But that's another thing that's held for sale right now that will generate some cash. Just something that. That's the thing. I didn't toss it on the bullet point, but there's another cash generating thing that they're doing. This balance sheet's gonna be modified. It already is modified, right? It's almost we're in July here. Q2 is almost over, but forget the leases. I don't want to get into leases right now. It's I disagree with how they're handled on the balance sheet. It kind of interferes with my analysis, and
I find that funny. He don't want to talk about the leases. I think it was ASC. What was it? I want to say 482, but there was a change in accounting rules that affected GameStop and AMC and a bunch, every company. And I've talked about this with you guys for AMC. And I think it was first quarter of 2019 that forced companies to throw leases on the balance sheet as a liability. And that's why he said, I don't really agree with it. And I don't agree with it either, but it's an accounting rule. It's an accounting rule. And, people say, Adam Aaron ran up the debt to $10 billion. Well, it's leases. it's just an ongoing monthly expense. But the accounting rules changed, and all the companies were required to take all of their next 5 years of leases and put them on the balance sheet as a liability. And so that's why he doesn't like it. That's why he doesn't like it. But all the people that want to shoot arrows at AMC about their debt, do you ever hear them, besides me, do you ever hear them say what Roaring Kitty just said? I don't really want to talk about that because it's not a fair treatment of debt. That'd be like you taking your next 5 years of mortgage payments and saying that's debt that you owe right now. Is that really, is it really true?
No.
I think it was ASC 842. I think.
You know what he did bring up though too, Tony, that I thought was pretty interesting? He brought up going concerns.
Oh, I missed that. What did he say about the going concern?
He just brought it up that he was
That they don't have one?
No, they did.
Oh, they did have a going concern warning?
Yeah, rewinded a minute. Like about 40 seconds to a minute. He said
I don't want to rewind it. I trust you. If he said that, I'm going to go back and look at their 2020 10 Qs now.
Yeah.
If they had a going concern, I mean, that's a high bankruptcy risk factor. If you see that, AMC, by the way,
that's exactly what he said, but when he said it, it struck my attention, and I was like, I want to know.
Yeah, I mean, if you see that in a company's filings, that should like make your hair on the back of your neck stand up. Like, oh shit! They're even acknowledging that they have a potential bankruptcy risk, and that kind of gives me a little bit of comfort right now that AMC does not have a going concern risk factor in their 10 Qs. Over the next 12 months, they don't.
Just the fact that he mentioned it means that he was looking at it, Tony.
Yeah. I mean, it is amazing. Anya said he's talking about everything you talk about, Tony. Thank you for noticing, Anya. Yeah, I mean, when we look at working capital and book value and the balance sheet and cash flows and going concern, these are very basic things that I want you guys to tune into. And you don't need to be a CPA. You could go watch my video and how to read a balance sheet in 5 minutes and pick up this level of knowledge that he's talking about. It's very basic stuff. And if you're holding a company for more than a week, you should know how to do this stuff. It's not difficult. But a lot of people get wrecked in plays because they get too intimidated to look at this stuff, and they think it's a fantastic company and the hype and yada, yada, yada. Meanwhile, you own a train wreck, and the longer you own it, if the squeeze you were hoping for doesn't happen, you are going to get obliterated. There's always the little squeeze cycles, but you got to know what you're holding if you're going to hold it for an extended time, right, Mediocre?
Absolutely.
And that doesn't mean that we're negative on any company. It's just like financials are the financials. It is what it is. It is what it is.
If you don't want to give them your money when they dilute, you got to know.
Yeah. The longer,
that's what you're doing.
The longer you hold an underperforming company, the more likely you're going to get a convertible debt dilution or just a straight dilution or a debt for equity swap or all of the tricks they do to stay alive.
That's their goal, to stay alive. And
They
you as a shareholder,
yeah,
you want them to stay alive. If they go bankrupt, you lose.
If they go bankrupt, you get nothing. But they have a lot of tricks, a lot of legal tricks to avoid Chapter 11. And any CFO is going to pull out everything that he can out of that bag of tricks as long as he can till the inevitable happens and a lender says, no mas, you're done. We're foreclosing on you. I'm talking about any of dozens and dozens of stocks you guys know about over the last 3 years that you've watched go bankrupt when people thought they were going to the moon. But they were all train wrecks. They were all train wrecks. And everybody was hoping for a squeeze that never happened because the companies were just diluting, and never bringing in revenue or not bringing in enough revenue. And that catches up to you at some point. Bed Bath & Beyond. A good recent example. There's been many.
There's a contra account in the liability section. We don't need to get into this now, but deferred income taxes, that has value as a going concern and so forth. And then other non-current assets. And I don't know where it's in here, but they also have the Game Informer magazine, which, I don't know how much that's worth. Everyone, I know Game Informer magazine. You automatically get it when you're a subscriber to Game to the GameStop membership account. Oh, by the way, they have 42. I should have mentioned this. They had 42 million members. I think that's what Hester Permit's presentation said. So when people say people don't shop there, it's like they're another reason they're incentivized to shop there. They have that membership, which gives them some perks and stuff. But 42 million anyway. They along with that membership, they get the subscription to Game Informer, and maybe not everyone reads it, but something like, I think I have the. Do I have it up? Yeah, here it is. Okay, so the
we got a beer delivery mediocre.
So this is the top subscriptions in the United States in Game Informer. Number 5 on the list with 6 million in subs. So like I said, I know not everyone necessarily reads it because you get it with the membership and so forth, but that's a lot of eyeballs on there. I mean, even if a fraction gaming and you go there, accrued accounts payable, accrued liability. So actually, some of these are probably like. Is it this one? Game gift cards and stuff. Like, that's what I mean. Like, that's kind of it's a legitimate liability, but kind of a soft liability. And then the operating leases, we can forget about those. The current portion long-term debt, this has already changed because of that bond exchange they did. They were able to extend the maturity a couple of years, and they got rid of some covenants because of it. Over 50% agreed to do it, and that's huge news. And because it gets them to the park. They get that fat cast position too. So yeah, it just seems to be in the ballpark. So it's meaningful because the market cap's at 260 company, good sized company, I should say, not a big company. But also noteworthy is it was fairly stable through the last console refresh, right? That matters. And then you have the Switch too. Sometimes these are staggered. The Switch was a couple years back. That's stabilizing things a bit. But anyway, you see this big drop down, and this year, I think because so much is going on, tail end of a console cycle, people withholding purchase and so forth, and the pandemic. But I think this big drop down, as opposed to it being fairly stable, as opposed to it being fairly stable, I think you might get a big jump next year over year. Maybe, I don't know, I'm just theorizing. But so anyway, that's what we should be focused on. And then we also got check out gross margin. So gross margin's a good one because usually with companies that are deteriorating and everything's falling apart, you see gross margin deteriorating as well. Like management can't control costs, they're losing control of stuff. But check out gross margins, like holding up fairly well. This is 3-year average, but even the 3-year average through 2020, 28%.
I'm gonna leave Tico in hand. I just gave him his food, okay?
Okay. So he's talking here, mediocre, about gross margins in I'm looking at the screen, 30%, 29%, 28%. GameStop right now, gross margin is 23% in the most recent quarter. 23%. And for the year, their gross margin was 24.5%. So even from when he was talking about it, because their revenue keeps falling, and I guess they're not able to cut the cost fast enough, their gross margin has gotten worse since he identified it as a value play, yet the market cap is like 100 times higher. I'm just pointing out some key things to think about when you guys hear me say that GameStop is overvalued at the current price. I want you to know the historical reference of what I'm looking at and what he's looking at, Roaring Kitty. We're a long
Yeah.
way away from 30% gross margin when he
Yeah.
was looking at the play.
I mean,
What-
that's the thing is we know that's happening, Tony. We've been looking at it, and we've been talking about it. It's just what are you gonna do? They need to do something.
Yep. Again, not being negative on GameStop, the numbers are just the numbers, but I don't think that the GameStop YouTubers are being honest with people about
Well, that's obvious.
about where they were, why it was a fucking excellent play in 2020 to 2021, yet they tell you that it's undervalued right now. By what measure? By what measure? Name me one thing that Roaring Kitty has seen so far that is still true today.
I'm waiting for him to bring up the synthetics, Tony.
I'm waiting for the synthetics and the short volume. We're gonna get into that in the next video, Mediocre, when he starts talking about the squeeze. All right,
I'm just being funny. You guys don't
I
take me
know
too serious.
we're having a good time, but I think this is, for some people, even if you don't have to like what we're talking about, but I want you to kind of get in my mind of how I'm looking at my analysis of this play. So that I don't hate GameStop, but I want you to see how someone who's doing real fundamental analysis, not just me saying it, this is Keith Gill telling you his thoughts.
It was only 27% in 2012 at the right before the last consoles. The last console cycle ended, and so that's pretty good. They're keeping it together. And if we scroll over and start looking at individual years, we see gross margin 29% this year, above the past 2 years. So even despite a huge sell-off, a huge decline in revenues, gross margin is holding up pretty well. And I see that, and I think, okay, all right, that's important to see right now. But also, is management doing a good job right now of focusing on higher margin stuff? Perhaps that's what I'd like to say. If this were down another year, I'd be like, oh. I'd believe less in the new management team, but it's holding up okay. And like I said, it's on par with where it was in 2014 and above 2012 and stuff. That's okay. That's good. But then you see SG&A, another important expense. I focus first on gross margin because those costs can be more difficult to manage, I think. But SG&A, I feel like this is a more easily fixed problem. And if you see this, it's been ballooning in recent years. It used to be 16, 17, 18 as a percentage of revenues, right? And then it's been increasing past couple of years. Part of that is because the denominator is declining, right? Revenues are going down. But it's not that alarming for me because it's fixable to me. I feel like you can, and I think PE firms are noticing this too. I think a lot, I know the activists talk about this too, but this is stuff that could be improved. So it's not that I'd be more concerned with gross margin deteriorating than I would be SG&A margin. And yes, I see this big jump up, and you see new management. Well, how come new management isn't reining this in? It's a good question. They need to. Maybe I think this could take a little bit more time to bring back, and especially because there's such a big decline in revenues. We'll see where it's at in the coming years, but something to keep your eye on. All right, so that's it. And then simple free cash flow. So I already brought up simple free cash flow, right? But let's focus. If we're trying to do some forecasting, just some light forecasting, I promise it'll be light. I think it's helpful let's look at simple free cash flow margin. Forget the aggregate numbers, but if we look at what it was over the past cycle, right? This is through May 3rd, 2014 through today. What's that, 7 years? We see an average. If you go down here, go to average on Google Sheets, an average of 3.4%. But for those first couple of years, you saw an average of 4.9%. But you obviously you cannot forecast that into the future. But I like, nevertheless, that's a good starting point. That's what I mean. That's the starting point. You need to look at how a company's performed over the past, and then try to determine how has the situation changed from how it was performing back then. There's been a meaningful change the past couple of years. This shift to digital, right? That's meaningful. And it's so much so that not only can we not start using 5% free cash flow margin, I don't even think, obviously the past couple of years it's been much lower, but I don't even think 3.4% should be used for forecasting. I don't even think half of that should be used. I wouldn't even use 3%, 2%. I wouldn't even use 1% because as a value investor, I'm just trying to make sure my downside is protected. And for that reason, I don't want to be too optimistic in my forecast. So I propose that we use like 20%. I've been thinking 20% of what that free cash flow margin was. So instead of 3.4%, everyone get your graphic calculators out, right? 0.034 times 0.68%. Now we're 0.68%. That's lower. That's almost, is that the lowest? If I add a decimal place there, can I do that? 0.59. So it's not the lowest, but it's pretty low, 0.68%. So if we forecast out 0.68% simple free cash flow margin moving forward, then it's also a question of what revenue should we forecast to try to get what the future free cash flows would be. So at this point, we're using that figure so we can look to revenues. We just got to forecast our revenues. That's what I mean. We're just using a simplistic cash flow analysis here, simple free cash flow margin, revenues. What do we think revenues will be moving forward? We could say, oh, we'll get back to 8 billion, 9 billion. I think no way, right? There's no way you can forecast taking back out the previous highs. In theory, it's possible. I don't even want to go down that path because I'm not concerned with what's possible. I'm concerned with what's probably most likely.
Do you hear what he just said, mediocre?
Which part?
I don't want to focus on what is possible. I want to
Right.
focus on what is probable.
Mm-hmm.
And a lot of what I hear out there in social media is imagine if this, imagine if this. Oh, there's a lot of things that are possible. And I try and, silo my analysis to what is most likely. It's possible he could invest in Bitcoin and it could go to $200,000 a coin.
Oh yeah.
But is it likely? Is it
No.
smart? Is it risk-free? Like, there's a lot of dreaming, I think, going on. And I have no idea what they're
You know what I
planning on
think,
doing,
Tony?
but I can analyze how they've been investing their cash very conservatively and wisely, in my opinion, in treasuries, being very good protectors of investors' money, but yet still generating a return on it, but not risking it unwisely. And I hear a lot of people throwing a lot of theories out there that have a ton of risk in them. Here's what they should do with the money. I don't know.
Well,
Do you want to roll the dice?
you want my thought, Tony?
Yeah.
I think, Korax is somewhat correct, but in his thesis on the whole PC thing, but I think that they should come up with an entry level PC.
You think that GameStop should come up with an entry level PC?
Entry level PC for PC gamers. Start selling some PC games. I know you can buy them all on Steam, stuff like that, but they're going to have to do something to stay relevant.
That's such a cutthroat fucking business right now. And
It
every
is.
year you got to reduce costs on your PCs. I mean, if it's
It
not
is.
your core competency, I shudder at the thought. And I come from the high-tech industry, mediocre. Or maybe you don't know. But I would be not thrilled at seeing GameStop get into the budget PC business. That is, in my mind, fraught with risk.
Well, they're okay. That's the problem they have, though, Tony. A lot of console gaming is going to PC. That's
All right.
happening.
So here's what I would say. If they could acquire a company that has a core competency in manufacturing budget
Or that,
PCs.
yeah, or that, so that they could put some sort of entry level PC in their store.
A company that has suppliers in China that know how to drive price down and
Yes,
know
exactly.
how to forecast the features. I mean, when I was in the business, we were forecasting features 2 years out. And, if you can acquire the right niche player, like Dell, acquired Alienware, if you can make a smart acquisition like that, maybe you get me on board. But I don't know. There's a lot of risk and a lot of inventory risk too.
The problem is, Tony, and I agree with you, right? And the PC industry's ever changing, right? There's constant upgrades all the time. That's why new consoles come out, right? But they're gonna have to stay relevant in the gaming industry, and I
Yeah.
don't know how they're going to be able to succeed doing that without. I don't know.
I mean,
That's
I see, I know where you guys are headed with that. I mean, if everything's going to digital, how do you stay relevant?
exactly.
Because at some point there's, well, those
I'm a GameStop fan.
they can still sell consoles, they can still sell controllers, but what percentage of their business is games? That is going to go away over time.
Right.
And yeah, I mean, maybe you're right. Like selling a PC gives them one more revenue stream that they don't have now, in addition to consoles.
Right. You get this PC, in these three games or whatever. You know what I mean? Whatever they have to do to bring in revenue. I don't know that you know how hard it is to get a gaming PC. Like you can't just go to Best. I mean, Best Buy does have some sometimes, right? But it's not like you could just walk into any place and buy a gaming PC.
Yeah,
You have to order it. It takes time to get it.
they could. I mean, they could differentiate themselves as the gaming PC experts, right? Instead of a big box store like a Best Buy. I mean,
Exactly.
yeah. I mean, I guess you could get me to the finish line on that one, but you're going to need to have a good game plan to really convince me.
Yeah. I mean, I'm rooting for them. I want them to do something, right? But what are they going to do? Sell dog food, Tony? Like, come on. We're talking about a game company, a gaming company.
Maybe they'll Toys R Us mediocre. Right? They'll sell Jeffrey plushies. All right. Let's see what else he has to say. And then I want to hear at least a few minutes of his celebration video, and we'll do some more of that on tomorrow's live stream.
And so I don't even. So you could maybe we'll see a jump. Maybe we don't get back to 8. Maybe we get back to 7 billion, or maybe we get to 6.5 billion. Remember, I talked about a potential leap. This is through Q1 though. Through Q2 and Q3, we should see continued declines in revenues. It will be lower than this. So
He just said maybe we'll get back to 6.5 or 7 billion. All they've done is go down. They're at 5.2 billion last year. So that did not work out.
I propose for forecast, if we forecast, I've been thinking like 5 billion in revenues over 6 years, or let's do 6 years. In that it'll be all over the place, right? But if that's our average revenue figure, then that'll be a number we can use for each year. And I think that's.
Did he just say what I heard him say? Let's forecast 5 billion in revenue. He said that, right? I mean, he almost nailed this year's revenue. God, this guy was smart.
There's no doubt.
Do you think that's decent? Do you think that's too high? Does anyone think that an average of 5 billion through the first 6 years of a console cycle is too high for GameStop when they used to be? It's not half of what they used to do, but that seems to me somewhat conservative. As does the simple free cash flow margin we mentioned.
He almost fucking nailed it 3 years ahead of time.
I used the online calculator just to keep it simple. If I wanted to do this precisely, I do it in a spreadsheet, but I just whipped this up really quickly before I kicked off this video. I don't know if this calculator is accurate. It doesn't matter because I can eyeball it and I know it's roughly in the ballpark of reality. So what I said was I took those. I did simple free cash flow margin of 0.68% times 5 billion over 6 years, just to keep it simple. I know it will fluctuate. And then I just bounced around the cash flows a little.
What, mediocre?
I said, did he just say reality?
I mean, this guy was ahead of his time. I mean, he was saying let's estimate that the revenue is going to go to 5 billion, and that's about where we're at, and we're probably going to be under 5 billion in 2024 based on current estimates.
Tony, he cares about as accurate of numbers as he can predict.
Right. He's not trying to shove a lollipop up your ass and tell you, you know, that I don't know where I'm going with that, but he's being very realistic, and I'm not hearing realistic from the GameStop YouTubers right now.
And I hear you.
I'd also like to see some of the GameStop YouTubers do what he's doing here, which is the discounted cash flow model. And I'd wager $1,000 that not one of them could do it, but let's watch him do it.
A little bit. It all averages out to 0.68%. So 0.68% times 5 billion is about, I think, was it 35, 34? 34 million. So this averages out to about 34, 35 million. And then I just, maybe second year, they'll have the most, blah, blah, blah. And then I use a discount rate of 20%. I feel like that's pretty conservative for the risks that are we're dealing with here. Maybe you think it should be higher. Let me know. Let me know. But using these assumptions, at least I'm showing you my assumptions. This is what I mean. Is that I see some bearish GME comments and articles and stuff. I think, just show me your numbers because I want to try to compare it to what I'm getting.
Here's the deal, guys. These GME YouTubers who say they're all about fundamentals and financials, as soon as it starts squeezing, you know, all that goes out the window, and they're looking at what's the short volume, what's the FTDs, how many shares are trading off exchange. All shit, in my experience of watching dozens and dozens and dozens of tickers, does not mean jack shit. Sometimes it matters, but 95% of the time it doesn't. I want to see these GameStop YouTubers walking you through a discounted free cash flow model and then tell you what the real value, a fair price for the stock is. So that's a challenge to any GameStop YouTuber. Tag me in your video.
Maybe you think the company cannot generate positive free cash flow moving forward. I feel like a lot of people might think that, but based on all that stuff that I showed previously of all these things that like the fundamental events that have been unfolding positively, and why I think some stuff's overdone, like you would have to explain to me that you'd have to say management cannot get a control of this stuff, or physical, they'll have zero interest within a couple of years and stuff. You'd have to be pretty bearish. Like you'd have to, for these numbers that I use to not be conservative, you'd have to have one of the most bearish outcomes that could possibly happen. Doesn't mean it can't happen, and absolutely can happen, but it just seems unlikely that that's what it's going to unfold. So if this unfolds, then you have present value of about 125 million plus the book value of about, let's just call it 400 million. That's what I was trying to get at here. Then you're getting at 500 million. That's twice what the market cap is. That's twice the market cap. And so that's what I think. I think about GameStop. I think it is at least a double. I think it is probably a triple, but it legit could be a 4 to 5 bagger. It could be looking out 6 to 18 months or so. Yeah, so that's what I think. If you disagree with that, that's fine. I like I said, I've been wrong about plenty of things in the past, but I see Hester and Perman, I see Scion's analysis, and I see my own analysis, and it strikes me as we're security analysts, and we're looking at this, and then I get really, so I mean, I try to come up with why it's trading where it is, because I'm really confused, because I feel like other people, either we're all wrong, or everyone's looking at the wrong stuff, and if they've gotten the wrong impression, which I've seen happen before, but this is something. This is something, because it's one of the biggest misperceptions I've seen in a while, I think. Ever? Maybe. I don't know. Maybe not ever. I don't know. But, okay, so that's that. So let me know if you disagree. And if you think they can't generate positive free cash flow, I'd be interested about that. Like, if you think they're done and that this is it and that they cannot do it, that'd be interesting to me. So let me know. Again, either in the comments to this video or let me know on Twitter or in the live stream or wherever. The other we talk about fundamental events, right? So this is the thing. You see,
you know, the other thing that he did mediocre is he actually engaged with people that had a different viewpoint than them, and he didn't belittle them, call them names, act misogynistically towards their wives. He had adult conversation with people that disagreed with him,
Kind of like we do.
kind of like we do. But you don't see a lot of that in the current GameStop community. If you disagree with them, instead of having a financial discussion with you, it's full on attack mode because they're not
I mean,
really versed in true financial fundamental analysis.
I want to know what the other side thinks. I want to know why. Why do
Absolutely.
you think that?
And I do the same thing in AMC, like, and some of you in the chat, as long as you can have a adult conversation with me about your viewpoint on AMC, it doesn't have to agree with mine. I have a slightly bullish long-term outlook on AMC, but I'm not completely discounting all the risk either. It's a speculative play. And I love to hear from people that have a different perspective, as long as they're not insulting. It's just a lot of the bearish community does personal attacks, and I'm not all about that. But there are some that I've had very good conversations with, and it's helped shift my perspective on maybe buying a hold is not the best strategy. You know what I mean?
I mean, I'll admit,
until the teeter-totter tips more in the direction of, hey, we're about to enter a cycle of profits, and maybe that'll be next year.
I mean, I was a buy and hold guy in AMC. You know that.
Yeah,
I mean,
I was too from 2021 to 2023.
Didn't
work out so well, mediocre.
No, when not that the game is over, but when you know what's going to happen, you can see what's going to happen.
The balance sheet's running dry.
Right. You gotta protect your money. Just,
you know what the management is going to need to do. That doesn't mean that they're evil. It doesn't mean they're trying to kill your short squeeze. It's just like, hey, the balance sheet's the balance sheet, and they don't want bankruptcy. They're going to do what they need to do. I'm talking about AMC.
And you don't want bankruptcy, believe me.
Yeah.
You would get bankruptcy way before you ever got a short squeeze.
You're going to be like the BBBY people, or the MMTLP people, trying to take everybody to court and fight Congress. And I was robbed. No, you just didn't pay attention to the financial statements.
Yeah, and I won't be in that line with you.
I won't be in that line either. I'll be out of the play. If it gets to the point where I think AMC is going bankrupt, I'm done. But we're not anywhere close to that right now. Is it a risky play? Yeah, sure.
Yeah.
But that's why we pay such close attention to the numbers. All right, let's keep going and try and wrap this one up.
In my other videos, I'll do some technical analysis, and I incorporate that into my approach. But if you're really trying to make some big gains and stuff, where you make the most money, it's through fundamental analysis. Positions like this, where I'm digging into the details, technical analysis to facilitate the position. Sometimes it is my focus. Sometimes technical analysis is my focus, but I'm not making the biggest money on that type of a position. That's why you see
mediocre.
Yeah.
Who does that sound like?
That's funny that you say that. But he said you make your money on fundamental analysis.
What did he say? What did he say for the people in the back?
He said you make your money on fundamental analysis.
Did he talk about, trying to predict the algo repeating itself?
No. I did not hear that.
Now, he didn't come out right and say what I've said before, like technical analysis doesn't fucking matter. We use, you guys know, we use technical analysis every day, but over the long term,
analysis guy.
over the long term in these speculative plays, TA is not your friend. The fucking financials and fundamentals is what you need to be focusing on, for your long-term outlook. From the day to day, trying to get a good entry and exit, TA might matter.
I'm going to tell you guys what technical analysis is, and this is the truth, okay? Technical analysis is a representation of what already happened. Okay? It just shows you what the stock is doing. Does it work? Absolutely. Technical analysis does work, but you have to couple that with fundamental analysis.
So mediocre, if I put up the GameStop chart and I draw a support line going upwards, you're telling me that it's not a guarantee that, because I heard on YouTube today, let me draw this yellow line and look, guys, I drew a line under here, so it can only go up from here. That was the TA that I got today on GameStop channels. Is that
problem?
Does that not work?
Okay, so I mean, it could go up because there's a lot of momentum behind the stock. I'll say that. Okay,
Yeah.
But like I know what the stock is worth, right? And I had to learn, and it was a brutal lesson. Now I can't say it was a brutal lesson, but it was eye opening when you know what a stock is worth, how easy it is to trade. If you know what a company's value is, it makes it much easier to trade the stock, in my opinion.
And the reason for that, in my mind, is because I know there are institutions with a lot more money than me that they know what the fundamental value is. They're not all up in their emotions and the hopium, and they feel very confident in shorting shit down until it hits a fundamental value. And then they'll start buying it. They'll switch to the long side.
Yeah, is exactly, because they're going to go where the money is. It doesn't matter. You know?
And that doesn't mean that we can't squeeze them from time to time. It just means that you need to be aware of what, and this is why we're doing this, tonight and tomorrow. You need to be aware of what Wall Street is thinking. And I mean, you just saw Keith Gill walk you through some key things to look at to determine what is a fair value. Those are important to fundamental investors, because once we understand the real fair value of a price, and if something is truly overvalued or undervalued, then you know what the big money is going to be trying to do. And it's not that they're mean or they're trying to take your money, or they are just going to do what they do. And you don't have, most of the time, you don't have the bankroll to fight those billions of dollars. Sometimes we get lucky. Sometimes they get over the skis. And maybe we're in one of those cycles. We just had one 2 weeks ago. Maybe we'll have another one in June. I don't know. But I'm just saying it's a good frame of reference for helping you decide how to trade something.
So I'm going to give you guys an example, and this is basically on Roaring Kitty when he just came back and put out all his tweets and all that stuff, right? Like, that was pure momentum. That was excitement. People were excited to get into play. That's what moved the stock. Yes, you can squeeze shorts. Yes, that is possible. I'm not denying any of that. But you have got to have something that gets that momentum moving. If you don't have that, they're going to beat you every time, And that is what people, I think, need to really understand, right? Like, to sit here and say, "Oh, people aren't selling this. They're not selling that. They're not doing this." You know what, Tony? I watched your
OBV
video
mediocre.
the other night.
No one's selling.
Your video the other night on CompuShare. Yeah. Okay. And I'm like, okay, that's right. You got CompuShare coming out and saying, look, we're not fudging numbers, right? And their information, their data is showing that people are, taking their shares back. They're not DRSing them. You still got people DRSing, but they're leaving faster than they're getting DRSed.
Yep.
And I know you guys might not want to hear that, and I'm not. Whatever happens, right? It got nothing to do with me. I'm just, and I didn't even go look at the numbers. I'm just telling you what I seen in Tony's video based off of what CompuShare was saying. But that happens every day. People realize that they're not making money or they're going to cut their loss or whatever, and they sell. It happens, right? So to deny that people are doing that is, I don't know.
I know it happens as a content creator based on all the names that I don't see anymore over the last 3 years, mediocre. And you can't tell me, that the GameStop YouTubers aren't seeing it too. They will tell you that no one's selling, but there are plenty of names that aren't around now that were around 1, 2, 3 years ago in our viewership. Right now, everything's exciting and people are coming back. GameStop YouTubers sub counts going up, mine's going up, everybody's is going up because that for right now the excitement is back. And maybe we can make something of that in June, to move these prices up. But if enough time drags on and nothing happens, it's going to go back to that grind until for GameStop, until they announce the acquisition and some profits, or for AMC until they get into some quarters, same thing, where they can book some profits. At the bottom, at the end of the day, bottom line, profits is what matter. Did you mean to turn your camera off?
No, it just happened.
Okay.
I don't know what happened with it. My internet's messed up over here. I'm trying to switch internets and all kinds of stuff.
All right. So enough talk about TA. Let's see what else he has to wrap us up here.
Me digging through a lot of the fundamental stuff because it's a bigger position. Just because of positions in the Roaring Kitty model portfolio doesn't mean I'm spending this much time on all the positions. It's just the ones that are of higher interest to me. Anyway, now to just pull up the chart. Do I already have it open? I think I do. Right there. So here, what is this? Let's do the monthly chart because it's a monthly chart. Technical analysis, they see this, they think, oh, this is terrible. Especially last year, they saw this. You can't touch this stock. You can't touch this. This looks terrible. It still looks terrible from the perspective of many technical analysts. Although you can see the RSA turning a bit here, it's starting to level off. Nevertheless, and this was with. If we do. Oh,
mediocre.
Yeah.
I don't see OBV on his indicators. I just wanted to point that out.
I wasn't even looking.
If we do we can adjust for dividends by doing this. I like to do this sometimes. So a dividend adjusted, we were over $50 back in 2013. And remember, I didn't even mention, just remember those share count. When I said things that have kept my attention, the share count, it's been halved. It's been halved since the previous console cycle. So something to bear in mind when you're looking at these historical prices. And they also have enough cash and authorization to purchase another $100 million worth of shares, which could get the share count down to 40 million. I don't think it's likely right now, but there's a case to be made that they should. So just something to keep your eye for. I don't think it's likely right now, July 2020. I don't think it's going to happen this year, but it's a possibility. If it happens, look out because, because that's it's going to change it even more. When you're buying back shares, it's so important to buy it back below. Book value per share or fair value per share, more importantly. And because I think fair value per share is quite a bit higher, it can be a good thing to buy back these shares. And if they do it,
All right. This is key, what he just said, because a lot of people in the GameStop community are talking about right now. GameStop could buy back shares right now. They could buy back shares in a few weeks if the price drops. What you just heard him say is what I'm saying to people on social media. No company, this goes for any company, should be buying shares back unless the share price is below what is universally considered a fair value or a fundamental value. So even at, $15, $12, I do not think it would be a good use of GameStop's cash to buy back shares. Could they? They could, but I don't think that the CFO is thinking like that.
Why would he though?
Why would he? I mean, people in social media, they want GameStop to buy back shares to reduce the float. I get the desire.
Okay, but what benefit does the company get from a reduced float?
None.
Exactly.
They get none.
I mean, I'm not trying to be a jerk. I'm just
Yeah,
trying to
I mean,
drag the information
think
out.
of a share buyback as returning value to shareholders. But you also need to ask yourself, what are some better uses of cash? GameStop is lacking profits right now. That is their biggest problem. So I want to see them make an intelligent decision to put that cash to use to deliver profits to the bottom line. Not,
Correct. Which
not reduce the
what
share
does that
count.
do for
That
shareholders?
is a retail investor's pipe dream, not grounded in any financial reality. No
Right,
CFO is
Tony.
thinking like that.
But when a company uses their capital in a way that helps that benefits the company, what does that do for shareholders?
Well, I mean, yeah, if it's some, you're talking about if they use it for like an acquisition.
Correct.
Yeah, that is a smart use of capital
And
because
it
you're
benefits
giving them a
the
greater
shareholder.
return on that
Right.
cash.
Buying shares back doesn't really help the shareholder.
No, it ruins your, well, I don't know. I'm not going to say that. I'm going to say it ruins the balance sheet, but it doesn't provide compelling benefit to the company. To the shareholders, yes. I understand why retail always wants companies to do share buybacks. Mullen, AMC, I mean, you name it. They all want share buybacks. And I will say the same thing for all of them. Not a good use of cash. Unless, like you just heard Keith say, unless the price is really somewhere near or below a true fundamental value. And until you can explain to me with numbers using some of the methodologies here what a true fundamental or fair value is, I'm not going to agree with you that GameStop or AMC or any of these companies should be doing share buybacks. Waste of cash. Why are they selling shares right now, Mediocre?
To put cash on the balance sheet.
Right. They need cash to be nimble and to grow the business. Buying shares back is a stupid use of cash right now for these businesses. They're not free cash flow positive. Into share buybacks and dividends are for companies that have so much cash and so much free cash flow that they don't even know what to do with the cash. You know what I'm saying, Mediocre?
Yeah.
If
And
you're at
these
that
guys,
point where you got so much cash on the balance sheet and so much positive free cash flow that you don't even know where to spend it, okay, pay a dividend, buy some shares
we
back.
we need
GameStop's
to
not there.
we need to be finding a business that's going to help us remain in our what would you call that criteria, in the gaming industry, right? What is going to help us remain in the gaming industry and help us to remain profitable?
Anya says, wouldn't a company buy back shares if they think the current price is undervalued? Yes, Anya, they certainly could. However, the problem is, Anya, and this is what I'm struggling to get across to people, and they think when I try and explain fundamental value of a share price, they think I hate GameStop because I'm telling them it's overvalued. $20 is overvalued by a lot. Look at what the analysts, the professionals are telling you. $7 a share. That is the fundamental value. I could walk you through 3 different scenarios to get a fundamental value for GameStop. They'd all end up at $7. Maybe a little bit higher if I add in a little bit for sentiment. There's no CFO that's sitting right now saying, yeah, our company's worth 2261. It's just not. It's just not. I understand why retail thinks that, but you're thinking emotionally, not like someone who was schooled in finance or accounting. So I could they do a share buyback? Could they do a dividend? Hey, we've seen companies do stupid stuff. Remember Bed Bath and Beyond buying shares back when the price was overvalued? What's happening now? They're bankrupt, and the CEO at the time is getting sued for wasting shareholders' cash. That's what happens when you do dumb shit. That is what happens when you do dumb shit. Buying back shares when cash should have been your main priority, maintaining cash on the balance sheet so you fix the business.
Tony, do you think the CFO is going to buy back shares?
I would say it's a very low probability. I would never say, impossible.
Tony, I would say no. How's that?
I've seen them do dumb stuff, in all the companies I'm watching. I don't think the GameStop executives are dumb. And why don't I think that? Because they just did a cash raise and a price run up. That tells me they're very smart. We were saying, in the week before they did the dilution, we were saying if they're smart, they were going to do a dilution now, right?
Absolutely, we were.
And they did. So I think they're smart.
We were talking about it on both AMC and GameStop.
Yep.
And what were they saying? What were some people saying to us, Tony, when we told them that they were going to dilute? They were telling us, no, they're not going to do that.
AMC or GameStop?
Both
or
of
both.
them. Both.
Yeah. Yeah.
They're like, no, they're not going to do that. Okay. I'm telling you, if I was a CEO, I would.
Guys, it is like if you can unplug your emotions from a play, it's like being Neo in the Matrix.
Yeah,
you can literally see what these guys are going to do next. People think I have inside information. No, I don't. I'm just not emotionally invested in any play, and I try to think like they're thinking.
Tony, turn your head left. See that in his ear? Turn your head right. That one's Adam Aaron. That one's Ryan Cohen right there. Oh, shit.
I was joking with someone in the Twitter DMs today, Mediocre. He said he appreciates all the content, and he was interested in becoming a member of the channel and joining the Discord. He's like, I remember when you used to do a bunch of live streams at night and you would get lit up. You would drink, and I was like, yeah, I don't do, that much on YouTube anymore. But when we do, this is the absolute best lit up alcohol fueled DD that you're going to get on any play. Hands down. I will run circles around people inebriated.
I mean, we also got that
while they're sober, trying to figure out how to do a discounted cash flow model.
We also got that in common with Roaring Kitty too. He likes to drink.
Yeah, that they want to call me a lush. Look at my idol here, Roaring Kitty, having a beer while he runs through spreadsheets. So I say, fuck all the haters and trolls, Mediocre. If you can provide the quality level, the accuracy level of information that we provide here, drunk. I'm not drunk right now, but having a few drinks like Keith or myself, imagine how dangerous we are during the day when we're sober and concentrating, Mediocre.
Tony, has my portfolio been growing?
Oh man, we've been making pennies.
You think I give a fuck what they think?
We don't give a fuck what they think. We don't give a fuck what they say.
Oh yeah. Shit.
All right, let's get back to my friend Keith here.
Increases the per share value even more than it would otherwise. So something to keep your eye on. But sorry, I lost the chart there. So here's the chart. Chart doesn't look that good on the monthly, but it's starting to flatten out a bit. You see the RSI brewed up. So if we switch it down to weekly, just a 3-year weekly, now it starts to get kind of interesting because now it's starting to build a base, right? Look at this. Again, it was looking kind of sketchy last year, and then it comes back down. Then it had that big sell-off. But this is the thing: when you're looking at a chart, you can't look at it in isolation. Everyone who analyzes charts should know this. I see this, you think, oh, look at that big sell-off. What happened that week? And yes, they did report earnings that week, but everything was selling off that week. It was a double. They were retesting companies like GameStop and some some of the companies I deal with were retesting the lows that week. That first week of last week of March, first week in April, they were retesting lows. Anyway, GameStop bounced right back. It was only 1 week down, then it comes back. Now it's flattening out around $4. So I see this. I think it's building the base. Doesn't mean that's how it's going to work out, but I just mean along that base, watch out because it could take off. And then you look at a 1.5 daily. And then you get to here. If you can get to 5, maybe they fill the gap and stuff. We don't need to get into all that. That's not the point. Obviously, this is a fundamentals focused thesis, right? So why am I even pulling up the chart? Just to show that things kind of feel like they're changing a little bit. And because if the chart does change a bit and it starts to look more bullish, you got other people who are piling into it as well. Just not just the longer term fundamentals focused people. That's why I kind of look at this stuff because I know other people are too. And if that chart turns, just people could start piling on. And then you get the short interest too. I didn't want to go into. Hopefully, it's clear the short interest isn't a main point to this thesis, but you need to acknowledge it. It's out there. Could it be unwound in a systematic manner so that nothing happens? Yeah, probably. But I don't know enough about the mechanics of the market to be sure about that type of thing. I'm not betting on a short squeeze, but it seems like something where it could take place. Although I think if you want a real short squeeze, you'd probably want a more levered company where people were truly like they was on the verge of bankruptcy and then suddenly it's not. GameStop, I don't know. Short interest too. I didn't want to go into. This is a fundamentals focused thesis, right? So why am I even pulling up the chart? Just to show that things kind of feel like they're changing a little bit. And because if the chart does change a bit and it starts to look more bullish, you got other people who are piling into it as well. Just not just the longer term fundamentals focused people. That's why I kind of look at this stuff because I know other people are too. And if that chart turns, just people could start piling on. And then you get the short interest too. I didn't want to go into. Hopefully, it's clear the short interest isn't a main point to this thesis, but you need to acknowledge it. It's out there. Could it be unwound in a systematic manner so that nothing happens? Yeah, probably. But I don't know enough about the mechanics of the market to be sure about that type of thing. I'm not betting on a short squeeze, but it's.
Wow.
He wasn't even betting on a fucking short squeeze. I have never heard him say that before, mediocre.
Me neither. That's interesting.
And he certainly didn't mention billions of naked shorts. He didn't even fucking care about the short interest.
No, he didn't.
Unfucking believable. How have we gotten so off the rails about what we're talking about now compared to what this genius was talking about 4 years ago?
Which makes you question what the hell happened 2 weeks ago.
I mean,
what was the point? That's why Tony, I was like, nah, I can't do it. There was nothing there. What was the reason?
The options chain was loaded up, mediocre, a week or two before he came on board. The options chain was getting spicy, but was that him? Was that him in collaboration with other people? Was all of that pre-planned? I don't think it was pre-planned with GameStop, or they would have had their prospectus ready to go the first day it squoze. But was it him working in conjunction with someone, loading up the options chain, knowing he was going to unleash a week-long barrage on Twitter? I don't know. We may never know. But we knew, and people were talking about it before Keith Gill even came back that Sunday night. People were already noticing activity in the options chain that was unusual. I remember them talking about it. All right, let's keep going. That is just amazing to me that he knew about the short interest, but it wasn't even his primary focus.
No, it was the fundamentals of the play.
Unfucking believable.
It seems like something where it could take place. Although I think if you want a real short squeeze, you'd probably want a more levered company where people were truly like they was on the verge of bankruptcy and then suddenly it's not. GameStop, I don't know. We just got to see what happens. But it would be nice if it goes up really quickly. But when you see all this stuff kind of adding up, you need to at least consider it, take it into consideration. But yeah, if the start if we get closer to this is what I mean. We're in July. The console cycle is right around the corner, and it's still priced in the gutter. It's pretty impressive to me. But next couple months, maybe sentiment will start to turn. chart will start to turn up. People start seeing that. I feel like people start seeing Burry's involved too. That could help because he's a legitimate, successful value investor, knows his shit, and see the activists and the management's making moves and stuff. Maybe it could happen in this by the end of 2020, but probably within the thesis should unfold fully within 18 months. If it doesn't happen by then, I don't know. I do think GameStop's going to be. It seems likely to me it's going to be bought out by a PE firm who sees what I see and thinks, all right, let's take this thing private and start. We can start taking out.
Did he just say private equity might buy GameStop? Oh my gosh. Morant probably had a heart attack. That's funny. That is funny. I haven't watched this video all the way through. I've watched the beginning of it a few times over the last couple of years, but I haven't ever made it this far. That is fucking hilarious. Might get bought out by a PE firm. But I thought they were all evil, Keith, and that once they bought the company, they would bankrupt it. Why would you think private equity would want to buy GameStop?
Sorry,
the free cash flows and stuff. I think that'll happen. It almost happened a couple of years ago in 2018, and at that time it was priced. It looked like it would have been bought out between 1 billion and 2 billion, something in that range, 1.5 billion. Since then, the share count's been whacked quite a bit. So if that were fair value, then we're looking at a much higher stock price. But when would it happen? 2 years from now, a year from now? At this point, I don't think it's going to happen before the console. I don't think it's going to happen before November. So I don't know. I think that's where this company's going, but I don't know the timing of it. But yeah, a lot of moving parts here. So I think that's it. And then finally, just some things that I don't think are I don't even talk about them because it's not a big part of my thesis. I'm just trying to make sure GameStop's still relevant and that it can generate some free cash flow. But there's a whole bunch of upside potential that's 100%, seemingly 100% discounted. Even I discount it myself because I can't, except for the first one, extended interest in physical games as compared to like in 5 years. What if right now, I know it's a distinct possibility that you at least should wherever, because
I think we kind of got the gist. That was some interesting stuff. I heard some things tonight that I have not heard him say before. And I heard some things that reinforce kind of how we view almost every play mediocre that we're looking at.
I know it blew my mind because I never really watched those videos because I was late to the game in 2021. You know what I mean? I was before the squeeze, but I wasn't paying attention to him. I just heard the hype. You know what I mean? So,
right.
Like, it blows my mind that he was talking the way that we talk in the Discord, you know?
And I think this is important historical facts for people to, have a foundation and where this all got started. And are we still, if we're saying GameStop is undervalued now because what Roaring Kitty said it was in 2020, I just want you to see what he was looking at back then is not even close to where we're at right now.
Right.
And that's fine. I mean, the short interest is high. Anytime I see short interest over 20% and we have a catalyst or momentum like the Roaring Kitty coming back, you can get a lot of interesting things happening. But that doesn't negate the fact that we still do fundamental analysis on every play. So we know kind of the foundation of what we're working with.
Tony, how often do you see in the chat over here somebody say, "Oh, it's easy. It's just a buy and hold. Don't worry about it."
Well, in my chats, not so much, but everywhere else.
There was one tonight. I seen it, but
all the time. Like if you go on the GameStop YouTubers, all you see is diamond hands, baby, buy and hold. I hope it drops so I can keep on buying. Like, why the fuck didn't you sell when it was 80?
Do they even know who Keith Gill is? I mean,
yeah, of course they know who he is. I mean,
okay, so they obviously didn't go back and watch the videos.
But they don't understand how he analyzed the play or what is actually important or what really undervalued is versus overvalued, which is today. Right now, someone when in the computer share video, this is tangential. Someone was saying, I don't believe that president of computer share, because he looked like he was reading. He probably was reading. I mean, it was a prepared video interview because they were so pissed at the amount of people accusing them of nefarious shit that they said, we're not only going to put out a FAQ, we're going to go on video on the record and tell people, look in our eyes. We are not cooking the books on DRS numbers. We can see all the people withdrawing their shares from computer share, but they're not telling you on Reddit that they're selling. They're not telling you on Reddit that they're taking their shares out. And someone commented, I just don't believe any of the data, mediocre. I don't believe anything of what anybody says. And I'm like, well, why would you even be in the stock market? If you don't believe the SEC, you don't believe FINRA, you don't believe NYSE, you don't believe computer share, you don't believe Adam Aaron, you don't believe AMC, you don't believe anybody except Ryan Cohen. He's the only one that's pure as the driven snow, even though he fucked everybody in Bed Bath & Beyond. Sideways with the lollipop. Anya, that one's for you. You don't believe anyone. I said, why are you in the stock market? He's like, well, have you ever been to a casino? Yeah, I've been to a casino. I love going to casinos, but I'm not in the stock market to fucking gamble. I'm in it to invest and to make fundamental and financial analysis and get the best odds I can, the lowest entry I can, and then to sell into run-ups to what? Book profits, rinse and repeat.
Exactly.
All this diamond hand, these fuckheads on the GameStop channels telling you don't sell as it runs to 80, as you watch a 700% run-up evaporate in your fingers because they told you to hold it all the way back down. Now you've lost 500% of that. You may or may not get it back in the next 30 days. What do you think I'd put odds on, mediocre? What do you think? I said at the beginning of this year, and people bet me money. I said we'd see $10. Remember that, mediocre?
Mhm.
I said
Oh, I do.
we would see $10 on GameStop this year. Oh, no way. I want to bet you. And I took the bets, and guess who won?
Oh, you did. I remember the bet.
Why did I win? Because I'm doing fundamental analysis, not this fucking hopium diamond ham bullshit. It's going to come back down. I don't know if it'll be this week, this month, this quarter. It's going to come back down. In the meantime, enjoy the ride, but just be smart. That's all. So that if we get another run up, you wisely have some brackets and take some off the table. That's all.
But Tony, what if they acquire something that's worth acquiring? Then what happens?
This is why, look, this is why you should know how to do a fundamental analysis. And I'd love to see the GameStop people do some, paper napkin analysis. All right. If they acquire a company that gives them 10 cents extra earnings per share per quarter, here's what the true value of GameStop stock would be. This is not hard stuff to do. I could do it for you. If they acquire a company that gives them $1 annual earnings per share bump, here's what the fair value of GameStop stock would be. This is what the GameStop YouTubers should be doing for people, but they don't want to do that because they'd have to acknowledge that $7 is the true fundamental value right now. And they don't want to say that.
Exactly.
Same reason why they don't want to tell people you should have sold at 80, because they'll, just like what happened to me a year ago when I said I'm selling ahead of the dilution event after the AMC ape conversion. They don't want to see their viewership decline or stagnate for months.
But Tony, I will say it's not only GameStop YouTubers.
It's all of them. It's all of them. We're just talking about GameStop today, and these people are particularly narcissistic, and they're feeding their people with the very bad message, which I think ultimately is hurting folks in the short term. You know, it may pay off in the long term if Ryan does a good acquisition, but let's run through some scenarios. If they won't do it, I'll do it eventually.
That's why I brought it up, because that's the thing, right? It may not be worth $7, maybe it's worth 12. You don't know.
Right. Yeah. I mean,
You have to do the analysis on the company to see.
I already did the analysis on the increase of book value due to the extra billion on the balance sheet. Increased the book value from 460 to 650. While the GameStop YouTubers were first telling you it increased it to 8. And then they watched my video and they're like, oh shit, he's right. 650. 643, I think is the exact. And then, you know, book value 643, we'll add a couple dollars to that for sentiment. That's why your analyst increased their price target from $5.60 to $7. They're doing the same analysis I am. I'll throw in some bonus dollars for sentiment. An analyst will never do that, a real analyst. So I don't know where it's going to come back down to. I don't know if we'll hit 10 again. I don't really care. I don't care. I'm not negative on GameStop. I don't care where the price ends up. I just know that for me to invest, I want the most risk-free entry possible on any play. That's why I'm out of AMC right now.
Because if you can't make money on it, what's the point of holding it?
I'm out of AMC. I sold in that run up, and I'm waiting for the price to come back down.
I also don't have AMC at the moment.
I want to get and I'm fully intend to get back in, but I'm waiting for the risk. There's never risk-free, but you know what I'm saying? I want the most risk-free, lowest cost basis position that sets me up for the best potential returns.
Now,
because these are speculative plays, so we need to get a good entry for a great return for taking that risk.
This is the other thing people do, Tony. I noticed is they'll say, "Well, AMC is worth $10. You know, it will be worth $10 in 2025." We're not in 2025 yet. You know what I mean? Like, we're not there yet. You know, 100 things could happen. We have no idea. Yeah, I agree with you. I think the outlook for AMC is good, and it's going to be, you know, around $10, maybe even higher. You know, in 2026, maybe even 15. I'm not sure. I don't know. I don't really give price targets on that. But what I'm saying is, as the box office increases, you know, revenue is going to increase. When revenue increases, the share price will increase, and so on and so forth. And so, yeah, I look at that. But now,
we've seen mediocre. If Hollywood puts out good movies, people come to the movies, right?
Oh yeah, exactly.
They're not providing. Well, we had the strike, so that kind of hurt this quarter and last quarter. And even the movies that we're getting, you know, they're not billion-dollar movies, but I'm very curious how Deadpool and Wolverine will do. And, you know, maybe Hollywood will get their act together. If they don't, then AMC's got another problem. But that's 2025 problem.
I wasn't trying to shift the conversation to AMC. I'm just trying to say in general, right? Like, these are things we look at to evaluate companies, to see where we think what they're worth, right? That's the bottom line. I just think that my opinion of AMC, well, today had a down day in AMC, so I feel bad for the shareholders at the moment, but, you know, it could come down some more. And
I think we're way closer. Wired Ape, what's up? How you doing? He says he thinks the lowest is around 390. I think AMC is much closer to its fair value than GameStop is right now.
Oh, absolutely. I agree with you.
You could buy at 411 and have a lot less risk, I think, than buying GameStop right now at 22. That's right. my opinion. And that's not because I like AMC better. It's just beaten down so much and the upside is so much higher. But, you know, AMC's problem is they don't have $2 billion in free cash and no debt. So GameStop's got that on the AMC. The potential for GameStop to be a game changer is much higher. if they're smart about what they do.
Yeah, and I don't think that they're stupid by any means. I
No,
think Ryan Cohen's probably working on something now. I don't really know Ryan Cohen like I know Adam Aaron, but I'm just saying, they're not stupid. They're being paid good money for a reason.
yep. Someone asked, where is that comment? Could I do a analysis on a bank stock? Who is that? Oh,
Oh no,
not
but
money
excuse me.
advice says, yeah. He says, can you do a fundamental evaluation on all regional banks to consider best open puts? I am not the right person to do a bank financial statement analysis. Those get very complicated. I can do most businesses. Banks are a little bit different, but the person to ask, because it is her kind of like niche area, would be Markets with May. Like, I know my limitations. Every time I start looking at the bank's financial statements, any of them, it gets very complicated. I'm just going to be honest. So no, I would not say, could I, if I dedicated enough time, could I power my way through it? Probably. Do I want to? Not really. One Big Ace. Good question. Why invest in a company that will dilute in a run up? Because we will be selling into the run up. Big Ace. We already know, and we talk about it every day with anybody that wants to listen on live streams or in the Discord. Mediocre. He's asking, why would you invest in a company you know is going to dilute? Because we're paying very close attention to the box office, the cash balance, and the cash burn rate. And we're trying to get the best entry and then be out before any dilutive event or in any run up, to be out and then wait for it to come back
Right.
down. Do we always time it perfectly? No. Like, I got out on March 27th based on my analysis of the cash burn and my prediction that they were going to dilute. And they did the next day. That's not because I had any inside info. It's because I spend an obscene amount of time analyzing everything about this play to extract the most profit from it possible. I gave the warning to everybody in the Discord for a week. And every day that went by before I sold my position, my warnings got stronger and stronger. And still some people said, I hear you, but I don't believe you. Everybody makes their own choice.
That's right. And what Tony's telling you is true because, I knew about it. I didn't jump on it, and I got to work twice as hard, in my position. It is what it is. But I will tell you this: information is not free, you guys. Like, if you want good quality data, you're going to pay for it. Tony pays for good quality data. There's websites that get you information quicker. You could use SEC Edgar. There's websites, right? But there's sites that you can get the information much quicker. It's not special. You got to pay for it. It is what it is, right? And Tony does that for the Discord. So
And I'm here like 10 to 12 hours a day reading filings, going through financials, analyzing, putting data in spreadsheets, thinking. I'm not putting out 5 clickbait videos a day with bullshit hopium. I'm not going live stream, dancing and insulting other people for 5 hours a day just to keep people's spirits up. I'm spending my time working, and for the people in the Discord, they get the benefit of that, because as I see things, I let them know. And unfortunately, I don't have time to do 5 hopium videos a day. YouTube is when I have time.
like I'll just give you guys an example, okay? Let's just say that you're in a company that's going to dilute. Right? You know it's going to happen. So you're paying for a website like Dilution Tracker, for example. Okay, Dilution Tracker. As soon as an S1 is filed, which some of you may not know what an S1 is, but as soon as an S1 is filed, boom, you get a notification. Okay, and as soon as that S1's filed, everybody gets that notification and knows, and the stock already starts to move. It allows you to exit much quicker than if you didn't know anything and you had to wait for your broker to tell you at whatever time that happens. I mean, it happens that way sometimes. So I mean, information is very important. I've come to realize that.
Well, I wanted to get into the Keith Gill like January 2021 when the price it had run up from the video we watched today was around $4, I think, $2. It ran up over 1,000% by January 21st, which is the video we're going to look at tomorrow. And it's a 7-hour live stream. So we're not going to do a 7-hour watch party tomorrow. I'll try and pick out some key moments. But I want you guys to hear, and I haven't listened to all 7 hours. I'll try and play it in the background tomorrow so I can, mark some key moments. I want you to hear how a real value investor is analyzing 1,000% run up, because that's not what you're hearing right now. You're not hearing him. Well, we'll save it for tomorrow.
I will say though, Tony, I was that video. I was not really expecting him to go into that much detail as he did. Do you know what I mean? I wasn't expecting the detail that he went into in this video.
He's a very smart guy. He's a good analytic value investor, and he fucking nailed it on GameStop. I wish I would have been watching his channel in July of 2020.
I mean, I would work with him in our group, dude. No doubt about it.
He would fit right in our group.
I know he would. We could make a shit ton of money, Tony.
Plus, he knows how to do memes, anyways. Douglas says, any thoughts on PCE in reaction tomorrow? Mediocre. You've been paying more attention to that this week than I have, because I've been working on some other stuff.
Honestly, I haven't looked at nothing this week. I've been out in the field busy. I set my trades and kind of forget it. I was relying on the Discord to keep me posted this week, to be totally honest.
I'll just share something else with you guys. The T+1 and the CAT system and OBV and the short exempt volume and off exchange trading and all the stuff that I see all these people talking about every day. You know how much time I spend worrying about any of that? You ever wonder why I'm not putting videos out on that stuff? Because I honestly think it's all meaningless to our trading. It's good, it's good fluff for YouTube channels that don't have anything better to talk about, anything meaningful. But
I like to make jokes.
You like to what?
Make jokes about it.
Yeah, we make jokes about it. It's all interesting stuff. Like, did you know, for example, that the T+1, what my thoughts are on the most meaningful market change due to T+1 is that the institutions are going to have a 43% reduction in collateral requirements. Did you know that? Do you hear anybody talking about that?
No.
They say that it's going to, when the T+1 happens, that's surely going to uncover all the shorts. It reduces their collateral requirements by 43% due to faster settlement. And all you hear is the YouTubers talking about how it's going to help us, probably going to fuck us. You think anyone on Wall Street does something to help us, mediocre?
Not at all.
So if you're wondering why I'm not putting videos out about it, because what am I going to say?
Once you understand how Wall Street actually works, and I'm going to keep this kind of to myself. I'm not going to go into great detail, but once you understand how Wall Street actually works, you would never, in my opinion, um, put your money and let somebody else control it in the market. I'll just leave it like that.
I'm just going to say, the best way to make money in Wall Street is look for companies with a long history of profits that are temporarily out of favor. Buy them at the lowest price you can, and then be patient. That
Like
is
Hershey.
Hershey, CVS, Disney. Disney's overpriced right now. I'd like it to be in the 80s again, but I mean, I've done value videos like Roaring Kitty, not to the level of detail that he did, because I'm looking at multiple different stocks, and he was very focused on GameStop. But we made a lot of money on our value plays over the last year, and nobody wants to watch those videos for whatever reason. And I got more coming. I got more coming for you guys. But that is the best way to make money and still be able to sleep at night and not be having to post that you lost 400,000 because the CEO of an unprofitable company didn't give you a short squeeze. That CEO don't care about you or your short squeeze. He's trying to avoid Chapter 11. The sooner y'all realize that, the sooner every decision they are making makes sense. And then you won't get your feelings hurt and you won't lose money.
Michael Anthony, I'll tell you one of the stocks I really, really like. I pay attention to it a lot. Is CXX. It's a railroad company. I like that one a lot.
What's it trading at right now, Mediocre? 33, 34?
I think it went back up to 34 today. That was a 50-cent gain. Its low was this week was 33.09.
I'm buying CSX at 30. I'm a little more of a bottom feeder than Mediocre, but you got a profitable trade on that this week, didn't you?
Last week I exited and then took the money and sold some puts on GameStop with it.
The other one, Mediocre, just I was going to throw out to you, HE. Well, it was actually up 4%, but it was back in the $10 range. So I'd like to buy Hawaii Electric. This is a speculative play, though. It's a coin toss.
I love Hawaii Electric too.
I have my alert set on it for around the under $10 level. But it's coming back down after running back up to 11.72. But guys, if you can make $10 to $12 and sell call options while you're waiting for it to run up, covered calls, easy money.
Anya, I love that company, CSX. It's one of my favorite ones to look at.
Michael says, Tony, do you know why oil sold off so much today? I do not. Haven't looked at much economic news today. Anya says, buy and hold has worked for CSX. Are you in CSX, Anya? Oh, yeah. She said she got in at 10. Very nice.
That was years ago. She's had it for a long time.
Quad Racer says he's streaming your live stream. Who's streaming my live stream, Quad?
Probably me.
Are you talking about Mediocre or someone else? I don't see any other comment from him before that.
Me either. I don't know what he's talking about.
Man Rat is. All right. We'll get him on a copyright strike. All right, guys. Well, hopefully, he'll take the challenge of doing a discounted cash flow and explain that and tag me in it so he can do a true fundamental analysis of GameStop to his viewers. And hopefully he, stops robbing them of 700% run-ups by telling them not to sell. I don't know. I sold my AMC in the run-up, made 1,150%. and waiting for it to come back down to a fundamental value again. But mediocre, we're going to wrap this up tonight. We'll pick up tomorrow night and go through the pre-celebration January 2021 video with Roaring Kitty and go over, besides the fundamental analysis, some more of his reactions of how a investor who has actually been there before reacts when a stock runs up.
That's a good idea.
I think it'll be fun, and it'll be Friday night.
Nice.
Ladies and gentlemen,
Still
thank
gotta-
you. We love you, mediocre. You got any parting thoughts?
Nah, just good night. Don't forget to hit the like, subscribe button. If you can, jump over to my channel, check that out. Follow us on Twitter,
Send mediocre a sub, guys. He's a good dude.
and jump on the
Not only
Discord.
does he make dimes, he makes pennies as well. Mediocre, I know you've been killing it this week on your profits. Congratulations on your selling cash secured puts. We've had guys in the Discord making thousands this week on GameStop as it trades sideways. So if you want to hear more about that, just hit that join button. Discord is free for anybody supporting the channel. It's about 16 cents a day. Thank you, guys. We love you. We will see you on tomorrow night's live stream, I hope.
Good night.
Have a good one and take care.
Let's go. Yeah. I'm like an addict, do I gotta have it. I ain't even playing, got a really bad habit. If it moves, gotta grab it. Fuse like a magnet, lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. I send the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back better than last. Yeah, it's a new me, never gonna look back.